ran the same playbook that he ran in 2020 to perfection, and CNBC and the news media let him do it again. Let's talk about that in a minute. Let's talk about cancellations spiking in the real estate game. This is something we brought to you first, and now it's being reported on lots of folks. And then finally, let's talk about Ken Griffin. The dude's building a 50,000 square foot home. You will not believe the valuation here in a minute, folks. Let's get into it, folks. What the heck did Bill Ackman do? What the heck is the Bill Ackman playbook? I want to remind you, I think it was March of 2020. Bill Ackman puts on a bet. He buys puts on the stock market, basically thinking the stock market's going down. He then goes on CNBC and whines and cries and says Hilton's going to zero and all of these other things are going to happen. Bingo, bango. In a few short weeks, he made over $1 billion. That is the Bill Ackman playbook. Put on a position, go on social media, go on the networks, and talk about it. So, what did Bill Ackman just do? What did Bill Ackman just profit from? And the news media is letting him do this. So, rewind the clock about 6 months. Bill Ackman says rates are going higher. And of course, if you believe rates are going higher, you think the price of bonds are going lower. So that is the trade that he puts on. So then he goes on social media after he puts on his play and says rates are going to 6, rates are going here, rates are going here, rates are going higher, rates are going higher. He talks it up. More and more Wall Street folks put on that bet. And guess what happens? Rates go up. And now he has cashed in his chips. He cashed in his chips earlier, or I guess late last week, and rates are already falling thereafter. So again, the Bill Ackman trade, put on a negative bet, go on social media, go on the networks, talk negative, print billions of dollars. I can't believe CNBC lets him do this, but whatever. It is what it is. Alrighty, folks, let's talk about cancellations. Remember, we brought you this first 2 or 3 weeks ago after a conversation with Omar. I said that, oh no, cancellations are going to be spiking. What did Redfin say yesterday? Redfin said cancellations have spiked to 16.7%. 16.7%. There are some markets that are even over 20%. Miami, Orlando, Tampa. Think about that. That's 1 in 5 transactions that is pending is going to get canceled. And then finally, if you want to know what market has the most or highest percentage of cancellations, it's Atlanta, Georgia. 24.4%. Let's just round to 25. That is 1 in 4 transactions canceling. Folks, the market's broken. I can't tell it any other way. Another thing that Redfin said, and I agree with, and I've been trying to communicate this to the world. Buyers, not sellers, buyers hold all of the power. If you are in a fortunate enough position to be shopping, you should be getting the best deal possible. You as a buyer are the rare bird. Sellers don't have any power. You want a credit? Ask for it. You want repairs? Ask for it. You want a rate buy down? Ask for it. You want a lower price? Ask for it. It's going to be a very, very cold winter. Transactions are going lower. Some people will still sell. Some people have to sell. These are the times where you only do great deals. Only. No good. Good is out the window until February. We will revisit in February. Please make sure you're doing the work. Make sure you know your numbers. And if you can make a deal cash flow and produce a great yield in this market, but we're not doing average, we're not doing good deals, only great deals. Okay? And again, Redfin is right. Buyers hold all of the cards. What about good old Ken Griffin? I had no idea He's a CEO of Citadel, if you don't know who that is. He is building a 50,000 square foot mansion. I don't know, what's bigger than a mansion? Like a mansion on mansion? He has secured 25 acres of oceanfront property in Palm Beach on an area often referred to as Billionaire Row. 25 acres, 50,000 square feet. It is estimated that once completed, it will be the first single-family home in the United States worth $1 billion. That is unfathomable to me. $1 billion for a single-family home. Wow, crazy. Raymond James has increased the call for recession odds in the next 9 months. Rising borrower costs, tapped out consumers, student loans, strikes, wars. I'm kind of right there with them. You know that I've called Q1 the start of the recession. I just see so many things going on in the economy. I think the economy is slowing down a lot faster than the rear view mirror that the Fed uses, but we shall see. Catching you up on what Altos Research is doing. Altos Research is a wonderful follow on YouTube, a wonderful follow on X or Twitter. Mike and team, we got to get Mike back on the show. He is wonderful. Active inventory grew 1%. I want people to realize what's happening right now. Buyers have left the building. So you're seeing inventory rise. It is unusual in the seasonal pattern of housing to have inventory rise right now. But realize, it's not like the doomers are saying. It's not because we are seeing waves of new supply. What we are seeing is existing listings age in place. We can say that because we are seeing new listings down year on year and week on week. But active inventory is up. So that just means that days on market, right? My favorite metric. It has only been my favorite metric for the last several months. I've been doing this 20 some odd years. I never really looked at days on market, but in a market where I am trying to find motivated sellers on listed properties, right? I don't door knock, I don't send mailers, I don't do any of these hard things. I just look online. Days on market is the key for me. Stale inventory is growing. It'll be very interesting. Right around the middle of November. So what's that, 3 weeks away? The middle of November, I think we're going to see one of two things. One, we may see lots of sellers take their listings off the market. They're basically like, hey, Thanksgiving's here, Christmas is here, New Year's is here. We will try again in the spring. I am certain that will happen some, but how much, I don't know. The other thing that may happen is the motivated sellers are going to start raising their hand. They're going to basically say, hey, I need to sell, bring me any offer. This is where you can get creative. This is where you can write disrespectful or aggressive or whatever words you'd want to use. It is the time to use terms, owner carry, sub 2, whatever your flavor is. I think by the middle of November, motivated sellers will raise their hands. Non-motivated will lower their hand and take their house off the market. Let's talk about mean or average and median. I know these terms haven't been thought about in a long time, but let's just show you an example of how mean and median can produce vastly different numbers. You ready? Here we go. This is according to the Federal Reserve. The mean or average American household net worth just crossed $1 million. In 2022, the mean or average net worth of the American household is $1.06 million. That is mind-boggling. Just so you know, in 2019, the mean or average net worth of the American household was $868,000. So, what is mean? You basically you add up all of the households and you divide by the number of households. That's the average or the mean. But let's talk about the median. What is the median U.S. household? That is where you line up from the lowest to the highest and you take the middle. It is going to produce a different number. But did you know it produces a significantly different number? The median is 192,900. How can that be? How can the average or mean be 1.06 million and the median be 192, let's call it 193,000? Well, the easy answer is the mean or average is highly influenced by the top 10%. The top 10% of U.S. households have a net worth over $6 million, 6.6. So it is skewing the average higher. That is what's going on. So I thought that was pretty interesting. And again, we talk about median here a lot because we talk about median home price. So again, median is the middle. Line them up, find the middle. All right, let's talk about some earnings. We are starting to get some earnings. We obviously got big tech earnings after hours, but before hours, we got Coca-Cola, beat top line, beat bottom line, and raised guidance. GM, General Motors, beat top line, beat bottom line, but retracted their Q4 forecast. These strikes are going to have a significant negative impact, and they don't know, makes total sense that GM would subtract or retract their Q4 forecast. But again, they beat top line, beat bottom line. That's because the strike happened right at the end of Q3, I think the last week and a half. But yes, they beat. An interesting article from Lance Lambert, Pulte Homes, gross margins last quarter, 29.5%. The gross margin. That's at the high of the range. Why is that important? Well, it just means that the builders have a lot of room to incent buyers. Think mortgage rate buydowns. Again, if the going rate is 8%, but the builder will give you 5.49, that is a significant benefit. And they will use that margin to move homes. And then lastly, Spotify, beat top line, beat bottom line, but not only beat, had a surprise profit. Yes, they made money. They were expected to lose money, but they made money thanks to cost cutting. So a couple of things. Yesterday evening, I think at 6 o'clock, I shared with you a video of how to become a great real estate investor. It is blocking and tackling, tried and true, buy box, how to set it up. It's about a half hour. My intention in that half hour was to take somebody who is interested and understand the basics of one rental at a time. How do we all do it? How do we understand and do great deals? Do me a favor, if you don't know what we're talking about with buy box or whatnot, watch that 30 minutes. I go through it in painful detail about why it's important and why it's the secret weapon to becoming a great real estate investor. And then at 9 o'clock today, I just recorded a video you are going to want to watch. I was interviewed yesterday by Jason Hartman, and I was sharing my 53-year spreadsheet. And Jason Hartman was very complimentary, but he says, you know what, Michael, you can make this better. I said, okay, I respect you. Tell me how. He said, Michael, you've got to add leverage. You have to add leverage, right? Your home price appreciation is cute and all, but you're not thinking like an investor. So we were playing with this spreadsheet. We put in factors, and it is eye-opening to look at the spreadsheet now in the context of leverage and also inflation. We should add the leverage, but we should also subtract inflation. So again, at 9 o'clock, you will see me bring up the spreadsheet. You will see me highlight what Jason was talking about. And trust me, you're going to want to see that because the numbers are bonkers. Absolutely bonkers. Alrighty, folks, let's congratulate someone. Ben, congratulations on getting your golden ticket. Folks, golden tickets are for your first deals. Oh, there's a black card. Black cards are for anybody to get their next deals. You can get unlimited numbers of these, but you can only ever get one of these. So Ben, your golden ticket will be in the mail today. Folks, if you want to get started with one rental at a time, there is a course, how to get started, one rental at a time for $3.99. You want to test it out, go buy a $47 buy box, buy a 6-hour mastermind. It's all out there for you, folks. Have an amazing day. Take care. Bye-bye.